Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are always happy to have you with us today. As always, I have a great friend, my great pal. And Al, did you have too much turkey this weekend?
Yes, I did, actually.
I hope everybody had a good Thanksgiving. How you doing, Al?
Very good. Yourself?
I'm doing really good. It's always great to be back, helping our Retire Young family make those better investing decisions. Al, we have another jam-packed show here today. We have a lot of listeners that want to get into these financial markets. When I say this financial markets, that's the whole market, the stock market, the options market, the futures market, and the Forex market. And what's happening is people just don't know where to start or how to start. So we have a lot of listeners that are brand new to the show that in the markets that have never done any trading before, investing. We have some people that have invested before, but it's mainly in their retirement accounts, their 401ks, IRAs. We also have a lot of listeners that have traded, and they just want to, learn new techniques and new strategies. So let's talk about those techniques and those strategies that the smart money is using. We always talk about the smart money. That's the banks, the institutions. They are always generating returns in the markets. Well, the public wants to do the same. They want to learn the skills to do the same. How can we participate like those financial institutions?
Well, Josh, the truth is that there's really two groups that participate in the markets. One group is consistently benefiting from the markets, and the other group, unfortunately, is not. The other group is struggling, and for many of the participants in that group, they're losing over time. So there's two different groups. Obviously, one is doing something different than the other. The good news is that we know what that group is. We know we call it the smart money. It's the big firms, the Wall Street firms, the hedge funds, the professional traders, Goldman Sachs, J.P. Morgan, companies like that. Mm-hmm. So if we know what that group is, we know that they're doing something different. And if we could identify what it is that they're doing different, wouldn't it make sense that as investors and traders, we try to do the same thing? So here's the key. The key is, or the important question, I guess, is what do they do that's so important to us? And it's simply moving price. And when you think about it, if you're going to be in the market as a trader or an investor, don't you want the price to go in your direction? That's how you participate with a profit. Well, really what we're doing, we're looking for quality trades. And what we mean by a quality trade for our students is something that has a high probability of working. In other words, putting the odds in your favor that whatever the trade or investment is going to work in your favor. It has a high probability of succeeding. And then also, if it's going to succeed, wouldn't you like to get the highest profit potential out of it? That's another component of a quality trade. And then you combine that with a reduced risk entry point. Those are the three components that really are important. And fortunately for us, we know how to identify that. It's part of what we call our core strategy. It's a foundational strategy that all of our students use. To be honest with you, it really is a timing mechanism. It's available in a way that times changes in the movement of something by identifying when the institutions are trading. When they fortunately for us, Josh, they provide kind of a telegraphing kind of a thing. They telegraph to us what they're doing.
Explain that a little bit.
Well, we know that the institutions, when they are going to enter into a position, they do it in a way that's different than you and me. I mean, we're all putting money into a position when we want to buy and go long on something. But for us, as the public, the novice traders, we're probably, and I shouldn't speak for all of you out there, but for most of us, we're not putting hundreds of millions of dollars into a trade, but the institutions can do that. They do it in such large quantities, such high volume that it causes price to move. The fortunate thing for us is that not all of their trades are filled at the same time because, and this is the very important component, these professionals, this smart money, they know what the real value of something is. I mean, they have access to data and systems that we just don't have access to. So they understand what the true value of something is, and they will enter at that value. And they don't want to pay any more for it. They know that at some point in time, the price will come back down into that true value area. So they will do their trades in increments. Our core strategy has been designed and refined over the years to identify where those moves are going to take place. And it's hard for us to kind of go over that on the air, But in these classes that I think you're going to be talking about, we show you how that works. And that is really the key component of our strategy, of the plan that our students have. It's identifying, when you get into something, when you get out of it. Those are the two really important components. But then also, in addition to that, you have to know the right asset and the right strategy to use in different market conditions. That's an important component. And you know what the third component is that is really critical if you're going to participate as a trader or investor? Keep your thinking and your gut out of your trades. In other words, keep the emotions out of your investment decisions. And you do that by following a proper plan that has a set of rules, a step-by-step process that you follow.
You're right. You have to have that plan. Just to reiterate that they're telegraphing where they are buying and where they are selling. I mean, what Al's talking about is when they telegraph, what we're reading is a chart, a price chart. And when big institutions are moving millions and billions of dollars, he was talking about how it really moves a lot. There's a lot of action or liquidity in there. And that moves the candlesticks on a price. And that's what you want to learn to read is how to find that footprint. I mean, think about it this way. It's unfortunately, it's that W word again. It's wintertime. And but we're going to see snow. And what happens when you walk through the snow, you leave a footprint. And that's where you're telegraphing where you're going. If someone's trying to follow you, you're telegraphing yourself. They can follow that footprint. And you need a core strategy like Al's talking about. We have that core strategy, which is designed to teach you how to read that footprint, to learn how to read that chart at low risk, high reward, high probability entry points into these markets. And you have to have a plan to do that. How do you use that plan? You follow it. Coming up in this next segment, Al mentioned you want to be in the right asset. When we talk about assets, we're talking about stock, options, futures, and Forex. And what is the smart money using? They're using all of them. So coming up next, all the different assets and trading and investing and how the smart money is using them. We'll be right back.